What is that?
Break even.
That's break even, right? What is this section right here?
Loss.
What does that represent?
Loss.
Notice we've got, here's our sales, or our cost, and here are our sales. Anything in that area there, I put a negative sign because that would be a loss, right? As we get more volume and we get to break even, we still have the same total fixed cost. We've got so many variable costs, but now we've got sales that are going to generate equal to that. So this would be losses. What would this be?
Profit.
This is all profit out here. And if we are operating at this volume right here, we would say that right there would be the profit. Does that make sense? Can you see what we're doing? We're taking fixed costs, adding the variable costs. We end up at a break-even point sometime. If I'm operating a business, wouldn't I want to know, what do I have to sell in order to break even? At what point do I start making a profit? This is going to tell me right there, if I chart this, that's what I need to get, that's what I need to sell every year or every month, depending upon if I'm looking at this monthly, annually, or whatever. What do I have to do to break even? Just cover all my costs. And then I might say, what do I have to do to make a $100,000 profit? Well, you'd have to sell this many. Because that's the profit that I'm looking for. So this would be my total variable cost, these would be my total fixed cost. We can convert all of those numbers into number of units. How many rounds of golf do we have to have on our golf course in order to break even? How many automobiles do we need to sell in order to break even? We've got fixed costs we've got to deal with, and we've got variable costs that we need to deal with. We're looking for our numbers. We're going to go through some examples here in a second. We end up with what's called a contribution margin. What is a contribution margin ratio? It's the contribution margin, it's contribution margin, sales minus variable costs. Gives it the contribution margin. What are we going to divide contribution margin by? Sales. An example. Contribution margin is $800 for all the products that we've sold. We ended up with a contribution margin of $800. We divide that by the total sales of $2,000, and we find out that the contribution margin is 40%. Meaning, for every $100 of sales we make, what will be the profit? Or the contribution to profit? $40. 40%. What is our cost of sales going to be? Contribution. What are our variable costs of the product under this scenario here? Get all my stuff off of here. If sales of 100, and we're going to take away from it to get the contribution margin of what? Variable costs. And the contribution margin is 40, then what are we going to put in for variable costs? What are our variable costs in this situation? 60 $60. What would be an example of this? Take a bookstore. We sell a book for $10, and the book cost us $5 or $6. We bought the book, cost us $6, we're going to sell it for $10. Contribution margin is $4 for every book we sell. Assume that all the books are identical, all cost the same, and they all sell for the same price. Just make it simple. For every extra book we sell, we're going to get $4 of contribution. What are our costs? Besides, the variable cost is the cost of the book. What are the fixed costs that a bookstore would have? Let me write down some fixed costs that a bookstore would have. We're going to be open 8 hours a day every day. Except Sunday. And we'll let the employees have Saturday off. So we'll just do 5 days a week. Good boss. Okay, what do we got? Let's say we rent the facility. We're going to pay rent whether we sell any books or not, right? Fixed. We've got to have an employee there from 8 to 5. A BYU Hawaii employee. You guys are all paid well, right? No? You're worth it though, right? You're worth what you can, what do you say? How did I say? What are you going to ultimately get paid for? What you do. Not what you know. You have to know in order to do. But it's not the degree that you have. It's going to earn you any money. It'll give you an opportunity to do. Say, well, gee, if this person has an accounting degree or a business degree from BYU, then they must know how to do something. So we'll hire them and see if they can do it. If they can't do it, we'll find somebody else. It'll open the door, but you still have to do. Okay, so we're going to have a salary or payroll expense or something. You're going to have utilities. Let's assume that these three, this is 1,000 inexpensive people. You get $500 a month. You live on $500 a month to go to school? Okay, good. All right, so we're set. 400? Maybe you down? But, okay. Utilities, let's just say 500. So we got $2,000 and they're fixed. Those are our fixed costs every month. If we don't sell one book, what's going to happen to us? How much will we lose? We're going to lose $2,000, right? We're going to lose $2,000 if we don't sell any books at all. Okay, so let me see if I can expand this over here. I'm going to pull this off here for a second. Well, that won't work. Now I'm going to get this other thing coming up. Maybe not. Okay, let's try this. Yeah, I knew that was going to come. I can't pull that down to make it work. All right. Back. Try something else. Okay, so here we've got, I want to go through, I've got a little example that I wrote out here. Let's say that we have total, this is a total operation, and we got a sale of units, and there's 1,000 of them that we sold. We sold them for $100,000. And the variable cost is $40,000 for a contribution margin of 60. We've got bought that product pretty well. Then per unit, we sold 1,000 is going to be 100. Our cost is 40, so our contribution margin is going to be 60, right, per unit. Sell for 100, cost is 40, our contribution margin is going to be 60. We've got fixed costs. Think of this over here, of 50. So, I'm going to put a bracket here because there are deductions. What's our net operating income? Net operating income is going to be 10,000, right? Everybody with me on that? That's very simple. What if we sell 1 unit? We only sell 1 unit instead of 1,000 units. Okay, what is our income? Sales? How much? 100. What is our variable cost?
40.
What is our contribution margin? What is our fixed cost?
50.
What is our net operating income? 49, 940. That's a good profit. Whoops. It isn't a profit. It's a loss. Everybody see what we did there? We only sold 1 unit. What if we sell 2 units? Now we're going to get really healthy. How much is sales? 200. Cost, variable cost. Contribution margin. Fixed cost. Same number. Big old ugly $50,000. It's a big nut to have to crack. You've got to do a lot of selling to get rid of it, to cover that, right? It'll take quite a bit. What's our profit and loss? 49.
880.
49,880, right? Okay, exercise. How many do we have to sell to break even? Get your calculators out. This isn't a quiz, this is just a question. How many units will we have to sell to break even? Josh, you're already sitting back. You know what it is?
I did it right. It's like, I think it's like 1250.
1250?
Maybe.
I'm gonna write some of these answers down. 1,250?
I think so. Might be wrong. It's divided by 50,000 divided by 40.
Anybody else? 8 what? 834?
What are we looking for?
833.
How many cents?
How many units do we have to
How
sell
many sales?
in order to break even?
Cents for the
Oh, and 900.
Oh,
900.
834.
8 what?
834 cents.
824?
34.
34. Anybody got another number?
$40,000, $50,000. Oh, 40,000.
Okay, how many, just by raising of hand, and you have to vote, you can't not vote. Even if you don't know, you gotta at least guess. How many say 1250? Josh, you're kinda out there on your own, looks like, so far.
Yeah.
834. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Saying roughly. 833. Nobody? 900. Now somebody hasn't voted because there's more than 16 people. 1, 2. Well, it looks like 834 has a majority. Is the majority always right? No. How did you get 834? Who started? You volunteered 834. How did you get that?
I took 50,000 and divided by the contribution per unit.
Per unit, right? So you took 50,000 divided by 60. And you got 833.3333. Since it's hard to sell a third of a unit, you rounded it to 34, right? That's pretty simple, isn't it? But isn't that important to know? If I'm the bookstore owner, I own the bookstore, or I own the computer company, or whatever it is, how many units am I responsible, or do I have to sell in order to cover